My first question is about CDBCs. There's been some chatter lately on the social media that people are concerned about the Fed creating a CDBC without legislative authorization. You and I have discussed that before, and as you know, there are other means other than a CDBC that could use digital assets to create a secure and instant payment system other than a CDBC. So the question is this: do you still agree that the Federal Reserve cannot introduce a U.S. central bank digital currency without congressional authorization?
Yes, I do.
Thank you. That's really calms people's fears, the people who are concerned that we could end up with something like the digital yuan that is used as a means of surveillance. So I think that will calm some of those discussions down. Thank you so much. My next question is about your core CPE. Now, as you know, there's a disconnect between how you measure inflation and how the American people see inflation, because the American people are spending their money on gasoline and food and rent, things that have gone up a lot. And they hear about these improvements in the economy that they're not seeing in their everyday lives. So can you explain what measures you use to evaluate inflation, and just explain to the American people why you don't factor in the things they spend money on every day, like food and gasoline?
Actually, we do. Our statutory target is inflation. It's not core inflation. So, and if you look at headline inflation over the last 12 months, that's it. That's our goal. It's 2.4%. Core inflation is actually higher than that. It's 2.8%. And the reason is that some energy and food prices have come down, and those don't count in core. So our overall legal target is headline inflation, which is, it's our best effort to capture the cost of living that people face. It's not perfect. You have to make all kinds of judgments that aren't easy. I mentioned the housing earlier. How do you measure housing inflation? Lots of issues, but that's what we target. The reason we look at core, though, is that headline inflation tends to be more volatile, and it tends to be pushed around by commodity prices, which really don't relate to the overall state of the economy. Is it tight? Is it loose? So core tends to be a better predictor of overall inflation than overall inflation is. I know that's complicated, but ultimately, though, our target is headline inflation, which does include food and energy.
Mr. Chairman, I'd like to include a letter in the record that Senator Tillis and I and two Democrats on this committee have submitted with regard to Basel III. My question...
Without objection.
Thank you very much. My question is this: what do you think is more likely, that it will be harder for consumers to buy a house and small business to obtain a loan under Basel III, or will lending just migrate outside the banking system, which may be harder to assess because it's opaque?
I'm sorry, I didn't get your question. I apologize.
Okay. So with regard to Basel III, if there are more constraints on lending activity, what is more apt to be the consequence of that? That it's harder for consumers to buy a house or a small business to get a loan, or that lending just migrates outside of the traditional banking system?
So if there were anything that constricted credit in the banking system, they would probably be both things. Probably there'd be fewer loans made, but in addition, there would be non-bank lenders that are more than happy to make that loan.